Hello there, Trading Mavericks. It is Tuesday, November 18th. Let's jump into it. In this session, we're going to go through what happened today. We're going to take a look at where the market is. We are teetering below the 50-day moving average. That's kind of our line in the sand at Maverick between a bullish and a bearish market. And I've got one bull, one sideways, and one bearish trade for you today.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
All right, today was a down day, but it definitely wasn't as bad as it started out. We started out with some bad news from Home Depot. They missed their earnings report. And the street was disappointed. Home Depot went down, and the market was already in a bad mood, and this made it a little bit worse mood. We did see continued selling, heavy selling in the AI sector. And I really talked about this probably 2 or 3 weeks ago, and I said, look, the rest of the market looks okay. It doesn't look great, but it looks okay. But AI just is not acting well, and you don't want to be playing in there unless you're on the short side. And it's been the right call. At some point, that will end, and these will get back in favor. But remember, these are momentum trades. When momentum is gone, you don't play with them. You only play with them when momentum is there. So it's just a no touch. If you are looking to be long these, just don't touch them. Wait for them to get back into favor. Don't try to catch a falling knife thinking you're going to get in early. That's a great way to feel a lot of pain as a trader. As I mentioned, the 50-day moving average has officially been broken. We need to see a retest, and I'll go through that here in just a second of what we need to see to really say that we are now in a bearish market. Dow lost 1%, S&P down just about 1%, Qs down 1.2%. All right, these numbers were much worse. At one point, the Qs were down 2% on the day, and we rallied all the way back up to where we were only down 0.5%. But we ended up down 1.2%. But take a look at Russell. Russell was up on the day. Oil gold up on the day. We take a look at the advanced decline line. It was greater than 50-50. So the internals are showing, hey, there's some buying going on. Nothing crazy, but there's some things that are holding in just fine. And I want to jump over here to this heat map because this just tells a story. I mean, those huge red blocks. I love this heat map because it shows you visually how much of a weighting it has in the S&P 500. Take a look at the weighting NVIDIA, Microsoft, Amazon have. When those are big red, that wipes out entire... Look at the energy sector. The energy sector, that's how big it is. So if the whole energy sector goes up in a day, but NVIDIA goes down, NVIDIA cancels out more than that. It actually probably about this size. So if all the real estate, all the utilities, all the energy stocks went up and NVIDIA went down, they cancel each other out. These companies have gotten so big that it's really distorting what's going on under the surface, which is why we started looking at both the S&P and the RSP on a chart. So here's the S&P, clearly broken down. After making new highs, made a new pullback. It held this time, did not hold this time. All right, now this is not a confirmed downtrend yet. We did come down to this level of support. Here's where we know it's a confirmed downtrend. If we rally back up and we fail and we make a new low, that is the confirmation of a downward trend. At that point, it'll be, hey, we're on the short train for the foreseeable future until this changes. There's been many times over the past 5 years where the S&P has briefly pierced through the 50-day moving average only to recover and go back up above it. If that happens, then this was really nothing. This was just a pullback inside of a bull market. Let's take a look at the RSP. So the weird thing is the RSP tells a totally different story because the RSP topped out a long time ago. We go all the way back to probably August. I guess we got a little bit higher, but not significantly higher. Not significantly higher at all, especially when compared to the S&P. The S&P had a big run here during the same time period. So we haven't been as strong, but over the past month, the RSP has actually outperformed comparative to the S&P. But you can see here, but here we have this range and we broke down below. Look, that's still a bad candle. I'm not going to sugarcoat this. The whole market looks a little sickly, but you can see the RSP had a green candle today. Green candle meaning there's more people buying out there than selling after the gap down in the morning. So what does that tell us? That tells us that AI stocks are out of favor and the rest of the market is probably more at a zero. Probably more at a zero, but the AI stocks are like at -2. So we're going to call this market a -1. I'm waiting for the retest of the 50-day moving average. A failure there, that would tell me, okay, we are now in a bearish market and we're going to change up some strategies. What does that mean right now? It means we are in the middle. We don't know. We don't know if this is going to hold or we don't know if we need to go bearish. So this is where discretion comes in as a trader saying, hey, maybe I just won't put out a lot of capital at the moment. There are great stories going on inside sectors. One of those stories, and we've been talking about this, is the healthcare. This is all healthcare right here. They look great. Healthcare looks good. Energy is looking great. So I think if you're playing in the right places, you can still go long. You just definitely want to avoid anything that is AI related, technology related, high beta names. Just avoid those altogether. Anything based on cryptocurrency is so out of favor right now. Here is Gilead. Gilead's a drug maker. They broke out. They based here for a bit, and you can see they pushed out just a really nice candle today. This stock completely ignored the bad news today and just people bought it. They didn't care about the bad news. They didn't care about anything else. People came in and bought it. Close at 127. I like 130 as a target here. I'm looking to do a 126, 130, so a $4 spread. I'm probably going to pay about $1.50 on this, meaning I got $2.50 of upside. And this says weekly, so I'm going to go out 2 or 3 weeks in time. I don't want to go much higher than that because this market is looking a little bit dicey. And I understand, just like we did that with shorts when the market was really powering up to new highs, and we talked about our shorts, you can't ask too much of your shorts because the rest of the market's going to drag things up. Same thing with when the market goes bad. We can't ask too much of our longs because the market is going to drag pretty much everything down with it. For a sideways trade, I've got PACAR, P-C-A-R. Sideways here, I like this. It came down into this level and buyers came in, big green candle with some volume on it. I do like this one. However, it only has $5 strikes. So I am forced to pick between, if I want to do butterfly, I have to pick either a 100 as the middle price or a 95 as the middle price. If I'm doing a butterfly, I'd much rather do something like a 92, 95, 98. So be down here at the bottom of the range. You could do a condor, but there may not be enough money in the condor to do like a 95 or a 90, 95, 100, 105 condor. If that one makes sense to you, you can do that one. But this one to me, I'm probably going to be shooting here because I do think this market's going to be more weak than strong. I'm looking at the 95. So the 90, 95, 100. That's going to give me a profit window right in here. And I think that's a really nice profit window to have here on PCAR. And then on the short side, this is Synopsys. Synopsys is in the tech sector. Here's what I like about this. When the tech sector was hot, it was cold. It had a bad earnings report, came back up, got about half of it back. But you could see since then, this thing is just marching lower, doing exactly what we see stocks and downtrends do. They bounce a little bit and fall over. They base a little bit. And here we have a base and it's happening right at support. Now, you've all seen when things come down to support and there's enthusiasm to buy it, there's a big bounce. I mean, we could just take a look at this last chart, PACAR. We take a look at this Packard, it came down to support and it had a big bounce with big volume. We take a look at this one down to major support, and you can see there is not a lot of enthusiasm to buy this whatsoever. And frankly, it's just hovering here. Today I had a little breakdown. The market bounce probably saved this one from breaking through. But for me, I like this one on the short side. I'm looking at 380. So I like 380, the 390, 380 bear put spread. That's going to be a -1 trade, meaning we're going to have a little bit of delta, but we're also going to have positive theta. So this thing doesn't have to really move for us. It just has to not go up and we'll be profitable. If you want to do more directional, I don't see any reason why you can't shoot for 360. 360 on this one, and it does have weekly options. Let's talk about tomorrow. Thursday is going to be wild. Why? We have two things happening Thursday. Wednesday after the bell, NVIDIA announces earnings. And we also, Thursday morning before the bell, we're finally getting the jobs numbers from the last couple of months. It's going to be big. The fact that we haven't had any job numbers, the market's a little bit unsure of where the economy is. That's part of the worry. Either it's going to be a lot better than the market thinks, or it's going to be a lot worse. That's going to move these markets. So I think tomorrow, I don't see a lot of people looking to stick their neck out. I think tomorrow is going to be a little bit mellow, maybe a little up day, up, 0.1%, 0.2%. But the worry is definitely there. There's definitely some weight on this market. And we'll have to see what happens on Thursday. If NVIDIA comes out great and the jobs numbers come out great, this is going to be a pierce of the 50-day moving average and then a resumption of an uptrend. If NVIDIA and the job numbers disappoint the markets, we are definitely shifting into a bearish market. Which one's it going to be? I don't know. Talk to me Thursday at the end of the day. I think that's where we are right now. I think it's a 50-50 call of what happens. But right now, the market is weak. So when I'm looking at that, it says, okay, if the current trend is going to stay, then it is probably going to be lower. But again, I'm not looking to stick my neck out at all on that call until I see that candle on Thursday. Thanks for joining me. Take care. Goodbye.